Okay, what I'd like to do today is introduce a different type of concept. I'm going to call it HFDT, and that would stand for high frequency day trading. Now, we know that in day trading, in general, they advocate taking one or two trades a day to not overtrade. Take your profits for that day, get out, wait for the next trading day and the next opportunity. Well, in this video, we're going to introduce just the opposite. Now, when you think of high frequency trading, what are the characteristics that you think of? You think of that they trade often, they trade in seconds and milliseconds, and they're in and out, and they take small profits, and they do that at a very high rate with a very high efficiency. So as a high frequency day trader, what we would try to do is emulate those concepts. So in the day trading, we would try to take many trades and capture small profits, but we also want to employ a system that will let our profits run and turn into big profits as well. So if we take trades of maybe 10 or more trades, let's say before noon, that would be a high frequency for a day trader. Now, what we're going to need to do this with is we're going to have an efficient way then to do our trading. In other words, we're going to have efficient indicators that let us get in and get out successfully many more times than not. Now we're going to use the processtrading.com indicators, and to accomplish our high frequency trading, we're going to introduce a new configuration of one of the indicators. So let me show you that indicator, and then I'll show you the way we're going to manage our trade around it. The new indicator is these yellow dots here, which I'll just call frequency dots. Up to now, we've also had timing alert dots. That's these blue dots. Now, all these indicators run on the TradeStation platform. So let me expand this window here and explain how we're going to use it. In looking for trades that we're going to use for high frequency, and we'll trade up until noon, and then to keep the video much shorter than like 3 or 4 hours, I will cut it down and only show the trades that are taken and not the whole morning's activity. But back to the indicators. What you're going to look for is exactly this relationship. You're going to look for a frequency dot that is above the price bar, followed within 2 bars, possibly 3, but 2 bars, a frequency dot that is below the price bar. When you have this configuration of a frequency dot above and a timing dot below, you're going to take that to the long side. Now in these trade setups, the frequency dot must precede the timing alert dot. So in this case here, you have a frequency dot below the price bar and a timing alert dot above it, so you can take it to the downside. Now that doesn't look like much of a trend to catch or much of a move to catch, but let's look at that. So that the high of that was 1125 and the low of this was 775. So that's 3.5 points from the high of that to the low of that. All we need to do is catch maybe a point of that. Let's continue to look at a couple other examples so you'll see the concept again. Here is a frequency dot above. Here's a timing alert dot below. And so you take that to the upside. Here's a timing alert dot below, a frequency dot above. So you take that to the downside. Now when you find this type of configuration, then you won't necessarily take that because it's not as clean. It doesn't have a single dot above and a single dot below. And let's look back and see a couple more. Here we have one below, one above, so we can take that to the downside. Here we have one below, one above. We can take that to the downside. This is after hours over here. This is where the new day started. You have one above and one below, so you could take this to the upside. And had you traded that, that wouldn't work. So we need, of course, to have a management way of handling ones that don't work as well. So let's collapse this window again, move it over to the right edge, and talk a second about how we're going to manage the trade. Well, this is the matrix in TradeStation, and it lets us set up the parameters for our trade. In other words, we're going to be taking on an order with 2 contracts here. Now, when we take on that order with 2 contracts, we also attach an OSO, or order sends order. And the way that we do that is we have 2 limit and 2 stops. So we configure those by hitting this little ellipsis here, and we can see that our limits are 4 ticks away, and then our second limit is 14 ticks away. Our stops are 13 ticks away, and the second stop is 14 ticks away. So, okay. Now let's look at that for when we put in our order. So if we wanted, in the matrix here, which is part of TradeStation, if we wanted to put in a long order, that's going to be on the blue side. If we want to put in a short order, that's going to be on the red side. So let's just say, for example's sake, we're going to take a long order. We'd go over here and we'd click on the blue spot and we'd put in our order. Here's our order with a buy of 2 contracts. We can see that one contract is 4 ticks away for our first limit that will sell that contract, and then the other is 13 ticks away, or maybe it was 14, where we would sell the second contract. Now we can always move these or cancel these however we want. And we will be moving them as well. So to move them, all you do is drag and drop. And then our stops are down here. One is 13 ticks away, one is 14 ticks away. And again, we could move these if we want. So we're going to be using the matrix to manage our trade order. So let's cancel this out right now. So when we see a particular setup like this over here, where we have a frequency dot above and a timing dot below, we're going to come over here, and wherever this yellow bar is, and that's where the price is being moved, and it shows up on the matrix, whichever way we're going, short or long, we're going to put our trade in immediately right at that price. So that's how we're going to manage our trade, and this is primarily what we're going to be looking for to be making our trade. But there'll be stretches, of course, where these frequency and timing dots do not show up. In order to make additional trades, we look over here. This is a price. Instead of having candlesticks, I just have it on a line here. And these dots here are the frequency dots that you see over here. But instead of having them all yellow as the frequency dots over here, some of these frequency dots I have red. And you can see that there's numbers associated with them above and below. So the numbers above the price line are associated with the yellow dots below it. And the numbers below the price line here are associated with the frequency dots above it. So the way that we employ those is we set up a trade according to the direction of the dots. So a red dot would be a short trade in this instance, and a yellow dots will be long trades in this instance. And the way that you do that is we look at this, and this is 96.25. It's 24.96.25. So what we would do in this instance, because it's below and it's associated with this red dot here, we would take a short at that time. So we would go over here, we would look for 24.96.25. And it would be 24.96.25. So we would put our short in right here, and we would let price come down to it and then go through it. On the other end, we have price here. It's above the price line, and it's associated with this yellow dot here, this frequency dot, and the price on that is 25.08 even. So we would go up here and we would look for 25.08 even right here, and we would place a long trade. So now we have a long trade and a short trade, and here's price in the middle of those two. And whichever direction it goes in, whichever one it hits, if it hits this, then we would let price run through it. And if it hits this, we let price run through it to the downside. So that's just another way that we will be looking to make trades. And between these types of trades and these types of trades, you'll end up with a high frequency of trades. And we'll see the management of the trades as we actually take them. So for right now, let's go ahead and cancel all those orders. Of course, we'll be looking at all the other process trading indicators as well. And let me run through those real quickly here. Here is the main price screen, or the main price screen pane or panel, and it has the VWAP here. And we know that when the VWAP changes colors, that tells us whether price is extended or not, and that the main colors are yellow for the upside and gray for the downside. Below that panel is the effort oscillator, which tells us the effort that is being used by the trading community to take the price higher or lower. Below that panel is the momentum panel or oscillator, and where we have the trade momentum, the time momentum, and the price momentum. So we can see when it gets above the upper bounds, and then price goes below the lower bound. That's the nature of this oscillator, especially with the trade momentum. It will go from high to low and then back up again. And then down in this panel down here is the short-term trend oscillator. So this tells us in the short term what trend is doing, and you can see the different colors on these different bars, and I'm not going to go over all that because primarily we want to talk about the concept of high frequency trading. And you can see right here we could have got into this trade here, which because the frequency dot was above and the timing dot was below, and we would get into it as soon as possible. Over on this pane here, we're going to be simply looking at the same information we have over here, just in a different configuration. Instead of candles, we have lines for price. And then this is the just the actual ATR. That's just a canned ATR. And then down here, we have a special configuration for the ATR that will help us read it somewhat. We have the same thing over here. This is on the 4500. We have the ATR, and then we have price above it here. And the way that we're looking at that, as you can see, price started. Let me click on that screen, move it over a little bit. Right at this point here. Right at this point here, this is midnight, so the new trading day started right there, and you can see that their demand was taking price up somewhat. But at the same time the demand was taking that price up, the actual ATR, and that's all this is a stocked ATR, the ATR was declining. You can see the divergence in the ATR and the price going up. So we understand that is the concept of the range. The average true range is getting smaller as price is ascending. So what that tells us in general is that within the trading community, it doesn't matter who it is doing it, the effort to, not this type of effort, but the ATR was telling us that the trading community is taking price higher, but it isn't demand driving up the top of the range. You know, the range is getting smaller. So it's not like there's a great influx of buyers coming in and demanding more and willing to pay a higher and higher premium for it. although price is going up, the range itself is getting smaller. You can understand this concept a little bit better by putting on a 30-minute time chart here. And essentially, what that is telling you is another type of indication on what the strength of the price movement may be. So we'll be using all the processtrading.com indicators, but primarily we want to see what we're going to do with the high frequency. So this is even prior to the market opening now. You know, we're about 14 minutes away. Here we see a frequency dot right here. And should we get a timing alert dot here, we would put on a trade to the downside. So that is how we're going to do it. I might take some trades without any dialogue here, but also at other times I will cut in to explain what we're looking at as far, if we wanted to read the market right now, we would see that the effort is clearly to the downside, to the short side. The effort isn't to take price up right now. The effort is to bring it down. And we see that the effort went down to the kind of the bottom of the oscillator, and now it's moving back up. So that even the effort to take it down is not as strong as it was, but still, it's not like it's green. It's not like there's demand is overwhelming. You can, and that maybe that's the way to think of it. You can think of it who's winning either supply or demand. You can see now that this bar is a little longer than this one, so supply is starting to show up a little bit more right here. Then we look down to the momentum oscillator and we see that the momentum clearly turned red right here, and we can kind of correspond that to the effort falling to the supply side, and it turned red, and we see price dropping off below. So now we have the trade momentum coming down, and we have price momentum. It's coming back up through. Those are critical points where price momentum cuts through time and trade momentum to the opposite directions. But we can see that that was just short-lived, and it's now coming back down through. So this is another indication that we wouldn't want to go contrarian to that, at least not at this point. Up here we see these two white bars on the price bars. These colored bars, whether they're white or gray, these are price cycle bars because we know that there's selling at the top and buying at the bottom. So we look at that, and we look at the trend. The short-term trend is clearly down. You can't see it here, but very well. Here is the cyan, the top of the short-term trend oscillator, and then down here is the magenta line, which is the bottom of the short-term trend oscillator. And this yellow line right here in the middle is the pullback line, and you can see how it hit that, and then price pulls back, just like here. So it's just a pullback line right here. So that would cause us to consider that this may be forming just a little double bottom here, and price is going to go back up because it's at the pullback line. So we have to coordinate, well, if that's true, well, what's the effort? If it's going to pull back and this is going to form that double bottom, then we would have to see some reduction in the effort bars and have them crossing over and going into the supply side as well. And then we'd have to see the trade momentum start to turn up, etc. So we're going to be reading those as well. So if we put on some trades here and there's no dialogue, you can look at the indicators and see, did they tell you and give you confirmation for your trade. But in general, we could take all these indicators off and just trade these indicators alone. But as we know that nothing's 100%, we want to get as much edge as possible, so we're going to be reading what the market is doing and what the trading community is doing as well, and then apply and manage our trade according to the system up here, with actually just employing the high frequency trading dots. So again, we are going to be using these dots, but don't forget over here we have this alternatively. And remember, this was at 96.25, and that was right over here. That would be a short trade. So we can put that on right now and see if price is going to go down and hit it. And we'll see how to manage that trade if it does hit it. Now, prior to hitting it, we're thinking, well, if it hits it here, what's our price configuration and what are our indicator configurations? Does that look like that's going to be a strong trade to the downside, or a kind of a narrow trade to the downside? Well, you have trade momentum right here that's almost down already to the bottom of the oscillator, and you have price momentum trying to come up through the bottom of the oscillator and through trade momentum. So if it hits this price right here, we're not necessarily expecting it to run a lot, so we'll immediately start moving this, which is like 14 ticks away, up to maybe 3 or 4 ticks away. And that'll constitute 2 trades, and we have 2 contracts on. So right now we're going to cancel this trade out. And we see over here we got another one at 96.50. Okay, so that one was a false signal. But you can see how that would have worked. Here we're at 96.25. We would have taken, where do we go? Right there is 96.25. We would have taken that to the short side, but the probability for us wasn't high enough, although potentially with two contracts you can make $25-50, something like that. But it being at the pullback line and the trade momentum and price being at the bottom here, the probability of taking that as a short trade, especially with the double bottom and everything, did not seem as high as we would like it. So in the meantime, let me show you what we're going to be looking for in the conclusion of our trading and why we're calling this high frequency. We'll look over here. We'll look at this in the end. We're going to set the range here. Here was the day that we did the high frequency trading, and we'll generate that report. And as you can see here, we took 30 trades, 29 were successful, 1 was unsuccessful for for $2.40. And out of the 30 trades, 15 were long and 15 were short. So one of the longs did not work. And this is what we're going to be looking for. And you can see the average winning trade here was 44.58. So small profits, but over a large amount of trades. And I think this trading day went up till noon or 1 o'clock, something like that. And you can see that it was like $1,200. So we'll be looking at this at the end of this session. Nope, just made a comment there, and I think I had it turned off, so I'm going to repeat it. And I'm sorry if it comes on as a duplicate, but I was mentioning that we had a frequency dot here and a timing dot below. Yep, there's the regular session just started. But we didn't take that trade. We didn't take this trade here because the effort oscillator and the trade momentum and everything was still pointing to the downside, so it didn't look like a high probability. So we'll just wait a minute here and we'll see how the open works, and we'll start our trading. So you can see we took that on the strength of this dot right over here, this setup, this frequency dot, and this timing alert dot to the upside. And then once it hit our first target, then we moved it up to just over our price entry, and that's where we gain our target. So we've already made one trade, and we are up $220. So essentially your trading day could be over if you wanted it to, but we're doing this to show high frequency trading, so we're going to stick with this for a while. And don't forget to keep looking at the different indicators. We see over here that now the effort is to take it longer. It's on the supply side, but the bars now went up to this apex and now are starting to come back down again. Although trade management is momentum is going up as well. So we continue to look at these indicators. One of the indicators I failed to mention was that we also use, this is strictly volume over here, but the volume bars are color coded, which also tell us in processtrading.com as to what the likely effort is to be to take price up or down. Here we see a price cycle bar is gray, so there's twice the volume there, and we see a frequency dot below it and a timing dot above it. So we could take this to the downside, but now that we see this move coming in to take price higher, this is demand coming in relatively strong with trade momentum. So we passed on this because it didn't have the high probability that we're looking for. Although we do see price now is above the top of the oscillator, and now it is coming back down through it. And we see that the price movement from before, as we mentioned, was with the ATR declining, and it's still declining. So we keep all of that in mind as well. Now, if we wanted to place a trade, we see over here on this panel, or this window, price is 2503. That's associated with this frequency dot. So we would place our trade at 2503, 2503.25, 2503.25, and that would be right here. If we wanted to put that trade on. And we can see that was right here. It went above it briefly, And you can watch that price. We didn't put that trade on, but you can watch that price and see how potentially that would have worked. Okay, here we have a frequency dot below and a timing dot above. So we could take this trade to the downside. Now we would have wanted to take it a little bit sooner than this. So we're going to pass on this one right now. But if we would have taken it when we first saw it, then potentially we would have been out already. And when we look at the effort oscillator, even though the price bars are descending, which means there's not as much demand to take price higher, this doesn't indicate that supply is coming in. Now, this indicates supply is coming in right here, this little move down here, because that's below the zero line, and that's a supply type of bar. But up until that point, just because these bars are gray over here on effort showing weakness, that shows a lack of interest in buying. It doesn't show a positive interest in selling. These bars, when they're below, show more of the positive interest in selling. So you can see again how that would have worked out with taking this trade to the downside, because the high over here was, what was it, 0275, and this low is 97.75. And clearly we're looking at a price here. This is no type of a trend. This is just kind of a sideways movement, but we did pick up the one trade there. We could have picked up a trade here, etc. Here we have the price cycle bars, the white being that it could be selling at the top over here, because we know that the price cycle bars are going to tell us there's either selling at the top or buying at the bottom. Here we see the ATR right at this time frame here. You see there's a peak there, and this was a low in the ATR, and the ATR is coming up while price is coming down. So that shows the range is getting higher while price is getting lower. So clearly there is more interest in taking price down to this point so far. Okay, here's this could be buying at the bottom, and now we have a bar right there. We'll just see, let's take a look here. We see trade momentum right in the middle. Although this would indicate you could take a trade to the long side, we still see a lot of supply down here. And trade momentum is red, and it's angling down. The only thing that would tell us about the long trade from the momentum indicator is that price is below the lower bound. And we know that that's overextended to some degree. Okay, so we took another order there. That was on the strength of this frequency dot being above and this timing dot being below, so we could take to the long side. We didn't get in exactly when we wanted to, but you saw how we managed the trade. Once our target got hit, we moved the second trade up, so there would clearly be no loss, and then we just let it run up to our second point. And at this point, it's a quarter. The market's been open for 15 minutes, and right now we're up 465. Okay, here we have potentially a frequency dot below and timing dot above, so we could take this to the downside. But again, we look at the effort here, and the demand is starting to come in. We see it, they're starting to get longer, so we're not going to take a short trade here, even though that would be the configuration for the short trade. and we have the momentum going up. The only thing we would have for a short trade is that price is above the upper bound of the oscillator here. But we look at our process trading ATR configuration here, and we see that it's angling to the upside and going up, so clearly we wouldn't be taking this short trade. You know, I'll probably cut this off here. I don't want to make this video too long. You can see that we've taken 2 trades already in 15 minutes. So if we extrapolated that till noon, you're taking 2 trades in 15 minutes. That would be like 12 or 16 trades or something by noon. But I wanted to show you the process and show you how it's done. And you can see over here is this last part. We'll just generate our trades today. Here's our comes out to be 4 trades because we put 2 trades on with 2 contracts and we manage those. So those were 4 trades. And that was in that first 15 minutes there. So that is a little bit about the concept of high-frequency trading or high-frequency day trading for the retail traders. But again, to do that, you have to have very accurate signals, and you have to manage your trades appropriately. So that's it for this video, and I hope all your trading goes well. Lastly, you can see here we had a timing dot above, or a frequency dot above, a timing dot below, so we could go to the long side, but we look down here, we see supply is coming in, trade momentum is going down. So if we were going to take this to the upside, and you can see how it reacts there, it bumped up a little bit, but it doesn't have the high probability that we're looking for. So the high probability trades come up frequently. That's why we can call this high frequency day trading. And you can see that would have just been another one that would have worked out here. So that's it for this video.